All right, Realty Executives, welcome back. Welcome to the second part of our Wednesday meeting. So we just heard about living trusts, all kinds of power of attorneys, all kinds of wonderful stuff. And obviously, we can't wait to bring them back. But we also need the financing part of it, right? Yeah. So the financing part of it, we're going to bring Mark One Mortgage to give us an explanation on the rates. They have great programs to explain to us. And so let's welcome Cynthia and Hugo from Mark One Mortgage.
Thank you. Good afternoon, everyone. How you doing today?
All right.
Good. Great. We appreciate the meeting. It was really good, half the first part of it. So we're going to go ahead and cover some of the products that we've been going over. It's really great products. This is Cynthia and Hugo. So I'll speak on one of them right now that we did take a course earlier this summer. It was a homeownership program, the HOP program. How many of you guys have heard of the HOP program?
You'll see it on your flyer. It's here.
So by the show of hands, not too many. It is a very specific program to LA and Orange County.
HOP program.
Which can offer 20% down for first-time home buyers, up to $75,000.
How many?
20% down, $75,000
Wow.
for a first-time home buyer.
That's a lot of money, which will make a huge impact
Can you believe that?
with the
So
buyers.
this is a HOP program, 20% down, 0% interest on a silent second. They just have to be in the home for 5 years, up to $75,000 cap. So X property, whatever it is, it's 20% down, but if it's more than that, you're capped at $75,000, okay?
First time home buyer?
Yes, first time home buyer. That means within the last 3 years you haven't purchased or sold a home.
Usually the rule is 4 years you're considered a first-time home buyer. That rule is specific to that program, just in case you guys are thinking of that. Now, just to feed off the HOP program, there is also free money. If we look, there's the WISH program. We've listed 10 different programs that should be able to help you with both buyers and listings here on this flyer. The WISH program is very unique. Unlike the HOP program, the WISH program does not need to be paid back. If the client stays in the house for 5 years, the money is free. They do not need to pay the money back. So that's a huge, and we're only asking for 640 FICO score. So they're not making it impossible. We really want to bring home ownership to everyone.
What's
We'll repeat that.
What's the FICO score on the HOP program?
On the HOP program, it's 640 minimum FICO score. And it's similar to how down payment assistant works for FHA, so there is like a debt ratio, and we wouldn't get into details.
Okay.
But yeah, it's about 640 FICO score.
Okay.
The program that Cynthia just covered, the WISH program, that goes down to 620 FICO score. And we'll just kind of recap that WISH program. So let's say you come in with $5,000, okay? The bank, no other county, no other government loan, the bank itself is willing to lend you $15,000. So it's a 3-to-1 ratio. You come in with $1,000, they're gonna give you $3,000. That can go towards your down payment or closing costs. So you're looking at someone with $5,000 is literally turned into $20,000 of buying power. That's huge for you guys, right? Now you're no longer in that, you even up probably your sales price at that point. So it's really just getting the specifics with us about the loan amount. I think the loan amount cap on that is about $453,000, but we can go over the specifics on that as well if you guys have any questions.
Besides that program, we have the MCC, we have the Home Ready, Home Possible. Mostly, and more importantly, oh my God, they got deleted off the flyer. We now have the I-10 program and the DACA program. So for those programs, before I talk about the I-10 and the DACA, for the Home Ready, Home Possible, the strength of these programs, they were made in order to fight FHA loans, let's just say. The MI is very competitive. The Home Ready, Home Possible are 3% and 5% conventional loans. Now, how this program can be used uniquely with your listings, Robert, we use this example with one of his clients. Let's say that your client has an FHA home now, but I really want to buy another property. I don't have 20% down, 25% down, I don't have a lot of down payment, don't want to be considered an investor. Again, they still own their FHA home, and there's a lot of red tape with buying an FHA, having an FHA, all that stuff, because there's only one at a time. So if we use a Home Possible program, maybe they can come in with 5% down. Now we can eliminate them having to come in with a larger down payment. They can retain their property. If they choose to sell it, that'd be great, that would be another conversation. But they can retain their property and still buy another property. Buy the move-up property, the other, property they always said they wanted to move into.
It's a really good program. It's gonna eliminate that 100-mile rule that I'm sure you guys have dealt with FHA. Have you guys have dealt with that, I'm sure, where they already have an FHA property and they think, oh, well, let me refinance that and I can go buy another property FHA. Well, you have to hold your horses because there is a 100-mile rule, which means that if you're gonna go buy another FHA property, knowing that you've already had one, they're gonna make sure it's 100 miles away and you still couldn't use your rental income. So it really limits you from buying. Now this opens that door where you don't have to refinance that current property that you may have FHA. You don't have to refinance that out of it. We did do it for somebody recently. They went and they bought with 3 or 5% down.
They did 5.
They did 5% down just because they liked the payment better, but they could have done the 3% option if they wished. But that's just the benefit of it, that now you're not limited to becoming an investor. You can definitely do it with very little down if you wish to. We can help you set yourself up to where you can put your existing property as a rental, buy something minimal down, and then start getting that going. So
What about our DACA program, the Home Dreamer?
yes, there is a Dreamer program. Cynthia has looked into that. We are going to set those up. Hopefully, we're trying to get them with very minimum down. I'm sure you guys have seen them before with like 35% down, 30%
3% down payment.
That's what we're looking for. And so it's
So
really
those
gonna
loans
open
are
up.
available if you have clients that are in that category. They are DACA, they're Dreamer, I guess, clients at that point, and TIN numbers. We can do a TIN number loan as well. Before, they had the program and then it got eliminated. Now we can do it for both self-employed and W-2 people, 10% down. Usually they want to do the foreign national, do larger. Now we're down to ITIN number, 10% down. DACA program, 3% down. We have our Chenoa, which is 0% down. CalHAPA, 0% down. Our WISH program, which gives you a 3-to-1. And our Home Ready, Home Pot. There's just so many programs out there. Our HOT program, MCC program. There's so many programs out there that can benefit, help clients. We just have to look for them and educate the clients and people that they are available and show them the benefit and how it could help in our everyday.
These loans are good for 1 to 4?
1 to 4 units, correct. Some of them are limited to single-family residences, but we can confirm that for you guys on the specific projects.
Okay.
So we want to do our Wealth Academy plug, and we found this on Netflix. Everybody has access to it if you have Netflix. It's called Explained. It's a new show, and I just want to show a 10-second clip that really ties into the Wealth Academy and just the real estate that we.
It touched slightly on the wealth gap, so just kind of just showing you guys how.
Quick question. On the I-10, I'll ask you later.
If you live in a stable country and can invest long-term, values generally go up. That's why you need to know about compounding interest. Imagine you took $100 and invested it in 1863. The average annual inflation-adjusted return in the U.S. stock market has been around 7%. The next year, it's worth a bit more, and a bit more, and a bit more. Today, that $100 would be worth more than $3.5 million. To this day, African Americans make a lot
Kind of
less money
shows
than
just the
whites.
whole cap of just the gap in the overall wealth retention.
Along with these programs, buying a property, and again with the Wealth Academy, Why Buy Real Estate, we can definitely get people into homes with any of these programs. There's 10 of them that we've listed here, and there's so many more available that we do work with. But these programs here should be able to help you guys start a conversation, get that appointment, and see how we can get people into home ownership.
So definitely let us know if you have any questions. We're here to answer them. And I think you mentioned you had something on the I-10 product, Mike?
Yeah, I did. What's the interest rates on the I-10 product?
Those can vary. I've seen some that go about 7 to 8%. We're looking at the program right now has a 10% down, so it's going to be in that range. We'll
So
look
it's
to see.
7-8% interest rate?
Yes.
Okay,
But
thank you.
it's similar to like private money, but it's something that we definitely do.
Gotcha.
The HOT program, does it have an income limitation?
It does. And it's similar to LA County and Orange County. So LA County, you're looking at a family of 4 is about 77,000. So it's not too bad. And that doesn't mean 4, 18 years and older working people. It's just a family of 4. So husband and wife and 2 kids, or 1 working income and 3 kids. That's a house of 4. You'll be at 77,000, almost 80,000 for LA County.
So if you have like kids to work, does it go up or it just?
No, it'll
just
still
for the-
limit you at 4, because then
for
it consider them still a house of 4.
So that total income, regardless of who's earning it, will qualify for the loan, or all parties need to qualify?
No, it's basically the person applying for the loan. So let's say, like you mentioned, Junior is in the house, he's making median, it doesn't matter. Whoever's applying for the loan,
77,000.
correct,
Got it.
that's the maximum.
Okay.
So that's the W-2 we'll take.
Got it, okay.
So thank you so much for your time. Let's not dismiss any clients. If there's any assistance, any help, please let us know. I'm sure we'll find a program that fits their needs.
Thank you for your time.
Thank you. Give me a round of applause for that. That was awesome. Okay, so I went on just last week and answered to a few of the questions that were posted in Facebook and in different platforms that the market was changing. And I'm going to tell you what I wrote. One of the main thing that I wrote is that the market is changing, but the market is you. Every single one of us is the market. If you educate yourself with this kind of programs, if you educate customers and the public with this kind of programs, you're the market. You have control of how many transactions you're going to do, how many listings you can get, and what kind of product are you going to move. So, wonderful information. Would you guys like a part 2 to it?
Yes.
Because I would like them to, personally, I'd like to get an hour from them and break down, 10-minute increments of each program, and so that we can really, capitalize on it. Because we're talking about mid-October, and then, we're going into the holidays. But this information is critical for somebody who has, 4 members of the family, 5 members, whatever that may be. These are the programs that I grew my career with back in 1997, 98, 1990. So they're back. I mean, how would you like to have money that you don't have to pay back, right? That was fantastic. So again, for anybody watching, if you're a first-time buyer, a second buyer, you want to buy your second home, you want to go into units, whatever, but you don't know how to put a program together. Here are the experts that can put a program together. We specialize in getting the home ready, the contracts written so you can close escrow, but the financing is absolutely critical, right? We can't close without the financing.
Nothing moves without the money.
So if you're a customer, you're somebody that's been on the fence about making another move, you just buy your home and you had it for 20 years, 30 years, this is your opportunity to find out a different kind of financing. If you haven't made the move from the fence to your first home, this is your opportunity. So if you have any questions, again, call our office, 925-1111, and we'll be glad to answer any questions you may have. So thanks everybody, and let's have a great day again.